Tuesday, January 27th, 2026, Maneco 64, home of alternative economics and contrarian views. Well, we're going to look at a few things today. One of them is volatility, and especially for the precious metals right now. And yesterday was a case in point. The other topic I want to cover is JP Morgan. Is JP Morgan really performing its fiduciary duty towards its clients, or is it really trying to protect its own book? I've heard a few things about JP Morgan, especially concerning silver. The other thing I want to talk about is gold, ore, and silver confiscation, which is something people always worry a lot about, especially in view of what happened in 1933, which technically wasn't really a confiscation. But anyway, we're going to look at that. And the other more fun thing we're going to look at is the value of silver back in the 1970s, what it did in 1980, of course, and what the Gnome of Zürich has been telling me of late in terms of his prognostications for silver and gold, actually, for this summer. And as far as silver is concerned in the 70s, we're going to look at an interesting post I saw on X concerning shadow stats. Many of you know John Williams from shadowstats.com. He's kept track of how they used to calculate CPI back in 1980, 1990, and how it's progressively changed and how it's progressively made CPI a lot lower. So those are the things we're going to look at. And before we do, just like to thank all of you again for your interest in the channel. A lot of you enjoy the content but haven't subscribed yet. I can tell that through by going through the analytics on my YouTube studio. So if you really enjoy the channel and haven't subscribed yet, make sure you do. The other thing I wanted to let you know is that there's a lot of talk about refiners, that they're not buying scrap gold or silver. And that might be so, but I don't think it's something we should worry about as retail investors, because we operate in a much smaller scale. And talking about gold and silver refiners and what's going on, as I've been saying of late, it's still not too late to get out of Dodge. And by Dodge, I mean fiat currencies, not just the dollar, but the pound, the euro, the Aussie dollar, the Canadian dollar, and so on. There's almost 200 currencies in the world, right? And you should try to have as little of those as possible, not just because the people who run those currencies use it as an instrument to keep you under their control by diminishing the value of it at a rate of knots, but also because it gives you protection. You need some protection outside this fiat currency system. Because as I've said many times, it will go to zero, and you don't want to be left holding the bag. So make sure you check our precious metals affiliates. I've been working with Andy Scheckman of Miles Franklin for many years. His dad, David, who founded the company with him, he's been a long time watcher of the channel, and he was the one who told Andy to contact me and to watch the channel too. So they're good friends. And if you want to get in touch with them in North America, yeah, there's some details below in the description. There's a link to a landing page. And Andy always says that the best thing to do is to call them and say that Maneko64 or Mario sent you there. And here in the UK, of course, Gold Investments. Yeah, I've been dealing with the company since 2002. I used to deal with Mike Temple, who's now retired. Oliver and Simon Temple now run the joint. And yeah, the link to Gold Investments is below in the description. And I would add that Gold Investments, they will ship anywhere in the world. So it's not just a UK-based bullion dealer, but you might want to check that. And they both provide storage facilities, private storage facilities as well, which is more important than ever these days. So let's start with the volatility. Well, yesterday, as I said, was a case in point. We saw silver, which closed on Friday last week, just above 103. First time it ever traded above 100. And for good measure, it went up to 103. And to be honest, I thought they might try to bring it below 100 yesterday. And they did try hard, especially towards the end of the day. But during the day, it just kept motoring ahead. And we even went to 100, just above 117. And I have an ex or Twitter friend. He's in the US, been following each other for quite a few years. He's a retail investor, and he sent me a direct message about silver. I said, yeah, it just keeps motoring ahead. And I said, I wouldn't be surprised if it would be at 120 by the end of the day. And at the time, it was probably 111, 112. And then all of a sudden, not just silver, but gold turned around. Gold, of course, had traded above 5,100. And we went back down, and actually gold went below 5,000 yesterday evening, London time, afternoon, Eastern time. And silver almost got back to, got back to around 102, 103. But it's picked right back up. This morning, as I speak here, it's 8 a.m. London time. And we've got gold now at 5,085. It's up 75 from yesterday's settlement. The low has been 06, and it's actually traded just above 5,100 overnight at 5,101. It's actually just been recent, that price. And I think yesterday the high was 5,111. So that's the all-time high there for you guys, 5,111. Right now we're at 5087. And silver is at 112.40. So yeah, it feels like it's down, of course, from that 117 top. And let's see where it was exactly, 117.74. But it's still way above 103, of course, which was the close on Friday. So yes, volatility. And I was speaking to a good friend who's a good source of information, and we're going to come to the JP Morgan information that comes from him. But I was chatting with him last night, and he said, yeah, you need to be tough. And I said, I am. I've been waiting for this since 2002, basically, even though when I started buying gold and silver back then, I didn't expect things to unravel as quickly. I did expect things to be doing what they're doing now after the '08 crisis, and they didn't. But so I'm immune to these swings. And that's why I keep telling you, hold on to your gold and silver for dear life. You need to do that. And the other thing is keep an even keel. Don't get too ebullient or excited, and don't get too despondent. Always ask yourself, do I really want to get rid of my God's money? Because that's what gold and silver are, God's money. They come from the earth, right? They're not like a human invention. Do you want to really get rid of that and store all the representation of your efforts that you've made throughout your life with a bunch of bankers who have a questionable, I would say, attitude to their clients? No, I wouldn't want to. So that's the way I think. So with that, let's skip to JP Morgan, because my good friend, he knows people that bank with JP Morgan, and he was telling me that he was told that they've been contacting clients telling them to get rid of their silver and buy gold, which I guess is not a bad thing. I mean, I think we've been above 100 in the gold-silver ratio about a year and a half or a year ago. I don't know exactly. And now we're around 50 or just below 50. It might make sense. And a lot of people might fall for it. And I think maybe some people have fallen for it because silver's kind of performing since it hit 117 yesterday. So maybe JP Morgan is, and I'm giving them a lot of credit here, looking after their clients, having or performing, their fiduciary duty. But I think it's more than that. And of course, this is speculation. I think they're concerned because silver is moving so rapidly, and we don't really know who JP Morgan holds their silver for, if they have as much silver as we're told, if they have a huge short position of 2 billion ounces like we're seeing now from an AI, an older gentleman in an AI video. But one thing I would say, I think the bullion banks are concerned. And I think they're concerned because they have a big short. That's what I would say in silver. And silver, of course, has been a commercial currency and money for a few thousand years. Yes, it's been kicked to the side for like a half century, but the bankers know deep down what silver is. It's money, right? You look at the name of the U.S. currency, dollar. It comes from the Spanish dollar. You look at the Spanish dollar, it comes from Joachim's thaler, which is a silver coin. You look at the name for money in French, it's argent, which is silver. Same for Spanish, plata. In Portuguese or in Brazil, where I'm from originally, you call it dinheiro. That's money. That comes from the denarius, which was a silver coin in ancient Rome. So, yeah, silver is all about money, really. Yes, it's become a very important industrial metal as well in the more modern era, and that makes it even more valuable, of course. So the other thing about JP Morgan is that Just Dario, who I follow and have interviewed here on the channel, he's an Italian analyst who used to work in the city of London, actually, in banking. Really nice guy. I've had him on a few times. he's heard, because it's based in Hong Kong, and he's heard from people at JP Morgan, or people, yeah, from a friend at JP Morgan, that they're advising the same thing to all the clients: sell your silver. So if JP Morgan is doing that, if I had an account with them and they came to me and said that, I said okay, and then I would call them later and say, please buy me some more silver. That's what I'd be doing. And maybe even take delivery of some of those 5,000 ounce bars that I've heard they're keeping for their clients. So anyway, let's skip to the confiscation. Well, yeah, 1933, Executive Order 6102. Yeah, technically it wasn't confiscation, but there was a lot of coercion. Yes, you could keep, I think it was 5 gold eagles, $20 gold pieces, which is just under 5 ounces of gold. But anything above that, you had to hand in to your local Federal Reserve branch, and they would give you a $20 Federal Reserve note in return. So, but if you didn't hand in, you were in danger of being arrested, imprisoned, and fined $10,000, which was a lot of money back then, right? So, it wasn't a confiscation. It was legal. Well, they used the Trading with the Enemy Act, which was an act passed during World War One. They used that law to take American gold, right? So yeah, it wasn't technically a confiscation, but what we need to understand is that back then the monetary system was completely different. Gold was money. That $20 gold piece was always $20. Yes, after they did that and they banned gold ownership, the whole thing changed. They basically destroyed the gold standard domestically, and then some months later, in January 1934, after they'd taken a lot of the gold from Americans, the Treasury revalued that gold from $20.67 per troy ounce to $35. And they made a big windfall, and you were holding the bag. You had those Federal Reserve notes. So they needed to do that because the Treasury needed to keep going. The country was in a depression. I'm not saying this is right, and I think it was the wrong thing to do, of course. But Roosevelt was a socialist, and he worked for the bankers. It helped save a lot of the big banks. What he did, and it helped him kickstart the welfare state with his New Deal. If he hadn't done what he did in 33 and 34, he wouldn't have been able to do that because there was a straitjacket on government doing that kind of stuff. And that was the beauty of gold as money, right? So gold didn't fail. It was the politicians that betrayed the American people. And Alan Greenspan warned about that. Well, didn't warn about that. He wrote about that in Gold and Economic Freedom in 1966. Statists hate the straitjacket of gold because they can't do they can't wage war willy-nilly. They can't start a new welfare state because the public will go to the bank and take their money or their gold out of the bank, and silver for that matter. But nowadays we don't have the pre-1933 system, and they can just print willy-nilly, and they can drive the price of gold and silver a lot higher because they're going to need gold and silver internationally. So what I'm trying to tell you here, the confiscation is going to be done de facto. It's not going to be de jure, or not sure how you pronounce that, but because it's not part of the system, gold and silver right now. So that's how I see it. I don't think there's a danger of confiscation. There is a danger, though, that the price will be so much higher that you will needlessly get rid of your gold and silver, even if you don't need to, for a lot of paper. And that's where I warn people against doing. So yeah, and that's to do with holding on for gold and silver for dear life as well, and all the volatility, right? So let's skip now to the final point, the Gnome of Zürich. Yeah, he's been fairly quiet like last week, which is good because sometimes I get the feeling he's watching the screen every second. So he went away for a whole week skiing, which was really nice for him. Skiing in Switzerland, of course. And yesterday he told me that, and here's the, you might think it's an outrageous forecast, but he sees gold at 8,400 by this summer. So there you go, $8,400. Doesn't seem far-fetched, does it? Considering that a couple of years ago we're below 2,000 and we're now at 5,000. And the other thing the Gnome of Zurich, who's an Elliott wave analyst, tells me, the faster and higher a market goes, especially in commodities, and yes, gold and silver are commodities, monetary commodities, albeit, the faster the market goes, the bigger the moves are. And also the corrections become sharper and quicker, just like we saw yesterday, right? But yeah, so that's why he sees 8,400. So what about silver? Well, silver sees it at, yes, wait for it, 840, so a 10-to-1 ratio. But in the meantime, he says, expect a lot of volatility and big corrections. Am I saying he's going to be right? No, I'm just telling you what he thinks. And I'm not telling to do anything, but just to think about it, right? What else did I say I was going to cover? Yeah, shadow stats. Yeah, I saw this post here on X from Silver Trade, at Silver Trade. It says the 1980 silver high of $50 adjusted for real inflation using shadow stats is 1,639. So you take that, divide by 50, which is the high roughly, and yeah, it's a 32.78 factor, right? And of course, that was a major spike in January 1980. So it was a big move, and part of the reason was the Hunt brothers. Also, part of the reason was the Soviet invasion of Afghanistan, which I remember quite well. And that's what drove silver. So this price might be a bit exaggerated because that was not like an average price. Let's say for the 1970s, the average price of silver was $4.12, and if you add 1980 to the 1970s, the average price is $5.65. And if you use that 32.78 factor to the 1970s and 80 average, you get 185.20. But then you also have to take into account that back then the debt to GDP ratio was 35, roughly, public debt. And now it's 125. And look at the money supply has gone parabolic. All the debt's gone parabolic. So am I saying we could also go to 1637? No, but it makes the Gnome of Zurich's objective more realistic, right? And is he expecting the top for this bull market this summer? No, this would be an interim top for him, and we'll cover the rest on another video. So just before I wrap up here, tomorrow is FOMC decision day or Fed decision day. They're not expected to change rates. Fed funds rate is at 375, but we'll keep an eye on for comments and statements. I'm not sure if there will be a press conference. Well, there will be a press conference actually, and we'll listen out for Jay Powell. So with that, I'm going to wish you all a very good day. Take care. Bye.